very glad to be joined by Andrew Mitchem, the founder of the Forex Trading Coach. I believe I don't know, it's been around more than 10 years, Andrew. Like very long. It's a very
like 20 trading.
20, okay.
Great bits up here now, Sal.
Yeah, and it's a great trader. A very well experienced trader. He has seen it all, and he has a lot of knowledge that will be hard to find in other places. So I'm very grateful that you're with us, Andrew, and I think you can take it from here, guys. We're gonna keep the chat just for discussions. If you have any question, please use the Q&A, and I'll be here in the background, in case anything is needed. But take the lead, Andrew, and guys, enjoy. A lot to learn from Andrew, so let's get started.
Awesome. Hey, thanks, Sol. Lovely to be here, everybody, and thanks to Sol and the 5%ers for the invite to be here. Really appreciate it, and nice to see lots of people from all around the world on here. So I want to get kind of straight into this because we've got about 40 minutes and then about 20 minutes of question time at the end. And as Sol said, please use the Q&A section, and I'll try and answer other questions as they come through, but certainly by the end of the session, we will have everybody's question answered. So we're here because we want to pass Prop Firm Challenge. And if you've done this in the past, you're probably going to know it's maybe not quite as easy as you once thought. So I'm going to give you some time, some knowledge, some information, and cover what I think are the most important key ingredients that you need to do, regardless of your strategy in some ways, to successfully and continually pass Prop Firm challenges. Now, we're going to cover quite a bit on this session, and I realize we've probably got people who are maybe brand new to trading and right through to people that have been doing this for a long, long time. As Sol mentioned, I've been trading Forex full-time for just about 20 years now, and the Forex Trading Coach is coming up 15 years this year. So well and truly sort of seen it all, and I'd like to pass on some of that knowledge and information for you to help you on this session. And here's just a list of content of what we're going to cover. But one thing I just want to point out to you is near the end of the session, I'm going to cover with you my personal trading examples and rules. I've got about 3 or 4 slides of rules that I personally use myself in my trading, and I believe are really important for you to use, and in order to share those things, in order to help you to pass these Prop Firm challenges. And then right near the end here, just before we do the Q&A, I've actually taken a screenshot just a couple of hours ago and added this slide just to show you my live trade performance from this week. So I was really conscious, you see some presentations and people give you all these fantastic ideas, and then you go, are you really trading? Are you really doing this? So I've taken a screenshot of my live account from just this week, and we're only 3 and a bit days into the week. So I wanted to say to you at the end, stay and look at those trades, and those trades will give you perfect examples of everything else that I'm going to cover as we go through. So let's get into it. Here's the list of content. I'm not going to read all these things out. You'll see them as we go through. Any questions, type them in the Q&A. So I just wanted to start with really, why are you trading now? Just a few slides about, to get you to think about what it is you're doing. Are you looking at trading as an investment? Is it something you're looking at as a longer term growth thing? Because I also realize there's a lot of people out there that look at trading as or particularly prop firms, as I need the cash now. And that can have some dangers because you're possibly risking too much and don't have a clear strategy. So that's another type of person. Some people just like a challenge. Are you challenging yourself against the market? One thing I think is really, really important is, do you really enjoy it? A lot of people wake up on a Monday morning and go, oh gosh, it's Monday morning, I've got to go to work. And on a Friday, they're happy because they've got the weekend. If you really enjoy trading, it should be the other way around. The market opens, whether it's Sunday, Monday, depending on where you live in the world, you should be excited and really enjoy this. And I can promise you that after 20 years of doing this, I love it. And the reasons why I still love it are because of the reasons I'm going to share. It's not a grind. It's not get glued to the screen type of trading. That's not the way I trade. Another one that relates to this cash, some people are sick of their job and they see trading as a way forward. Okay to be like that, but a few dangers. So I want to cover those. We'll also look at why we're going to look at using a prop firm, because to me, it solves the obvious issue. A lot of people come to me and they go, Andrew, love what you do. Would even like to join your course, but I don't have the amount of money. I've got $500, got $1,000. What a prop firm does to me is it has the potential of allowing a very good trader to make substantial returns. Now, it's not easy, and we're going to cover some tips for you, but it also has the downside potential of losing a poor trader multiple joining fees and therefore getting disillusioned with the market and giving up. Hopefully, we're going to get you into this one. If you become a very good trader, it does not matter where you live in the world, what your current job is, what your age is, how much money you have today. It really is completely irrelevant once you know what you're doing and you can pass prop firm challenges, because if you can do that, the returns will follow. The trouble is, though, is that people rush in. And I think this is one of the things that happens. You see prop firms out there online and emotions come into play. People see it as a get-rich-quick scheme. And then when they start trading in real money, let's say you happen to get through a demo challenge, and then fear comes into it because suddenly you're trading a large account. You're probably not used to that. The other emotion I see coming in all the time is greed. You do it because of money, money, money. Like I said, people just see the results without the hard work and the dedication to get there. People see it as easy money, but it's not. So one of the things you need to have to do is become profitable first. And I think this is really important. So this is where I'm going to give you the boring but true and real life way of how I see someone can become a successful trader. Always start on a small personal demo account, especially if you're learning a new strategy. Treat it like it is a live account, though. So many people open up like a 50 grand, 100 grand demo account and just go, oh, it doesn't matter that a trade's losing, or I got that lot size wrong. It doesn't matter. Treat it like it's real, because if you can do that and become profitable on that demo account, then move to a small personal live account. And I suggest that if you can have a demo account, maybe like a 10 grand demo account, that's probably going to be more similar to your first personal account. And then only once you're consistently profitable on that, you potentially move to a larger personal account. So take that time to do your homework first. It's like a painter, as in like decorator. They don't just paint a wall. They do all the prep work first, all the sanding and everything like that. Do that prep work first. And be profitable on your personal account first, and be consistently profitable. As I've said down here, don't just fluke a few trades and think you're ready to go to a prop firm, because there's so much more to it than just a 10% gain. If you fluked it, you can make 10% on one trade and really not know what you're doing. But you need to do this consistently, slow, steady approach, and remember the drawdown rules. We're going to cover all these, but this is just a few pointers for you. Because it's really important that you know your strategy. You've got to know yourself as a trader, and you've got to know your strategy inside out. So what type of trader are you? And as I mentioned at the end, I'm going to cover all of my real life things for you, but here's a few pointers. What type of trader are you? What time frame charts do you prefer trading? What days of the week do you trade? What markets do you look at? As we just discussed before we started with Sol, the Forex market so far, certainly in January of 2024, was not particularly good. Other markets were. So what markets are you looking at? And do you know your stats? Your drawdown, how much you're risking per trade, your win rate, all those type of things. It's really important that you know this in full before you even consider a prop firm. Because if you don't, you're going to jump into that prop firm and just randomly take trades and probably lose. Now, let's say you've done all that and you're maybe 6 months down the track and you've been profitable for most of that time on demo, small live account. Now you're ready to start moving onto a prop firm. But then things change. What rules does the prop firm have? Maybe they have different rules on different plans. Which is the best plan for you? Do you want to go through a plan that's possibly a little bit like less or less expensive to start with, but you may have to pass 2 or 3 demo challenges first? Or do you have the capability or the funds to say, I'm going to choose a live account if the prop firm offers that and go straight into that option. The temptation is to go straight into that option, but there can then become complications with that. So possibly look at the demo account first, prove to yourself, prove to the prop firm that you can do this, and then look at moving on to the live account. Now, one thing you might need to do is adjust your strategy to meet the rules. Because if your strategy has been, let's say, making you 10% relatively easily, but then you suddenly go, oh, I've had some losing trades and I'm now 20% down, then your strategy is not yet suited for a prop firm. So you've got to make some adjustments possibly to your strategy so you can quite comfortably pass the challenges and meet the rules that the prop firms offer. Can you trade the same markets as you've been trading? It's no good saying I've made all my money in the last month, let's say, on a market that the prop firm doesn't offer potentially. You might be a commodity trader, but the prop firm only offers Forex pairs. So little things like that you've got to get right and make sure you understand that. Can you keep your trades open over the weekend? Does the prop firm allow it? What happens if your strategy says, well, I need to keep my trades open over the weekend, but you go to a prop firm and they say every trade has to be closed before 5 p.m. on a Friday, New York time. So it's important to understand things like that and get everything ready for what you need according to the prop firm that you choose to go with. So as mentioned, bring your questions through on the Q&A. I see there's a few coming through here on the chat, but put them on the Q&A and I can cover those for you. Another problem that I hear people have all the time is how to trade a large account. You see, the problem is that you've got used to trading your demo account or maybe your small account, maybe $5,000, $1,000, $5,000, $10,000, let's say, on your personal account. And then suddenly you get into a prop firm and they go, here's a $100,000 account. And you're going, this is scary, because that will happen. If you're not used to it, it puts you outside your comfort zone and you'll start having issues. You'll start having emotions will come into your trading. You'll have doubt. Can I really do this? What happens if I lose that money? You'll have fear. You'll start self-doubting yourself. Potentially greed could start to take over and I'm going to pass this 10% really easy and start doing something silly with a trade. You start doing silly things that messes with your head and messes with your mind and your emotions when there's a bit of pressure. Now, all of a sudden going to a $100,000 account can be big pressure. You might start doing, a small trading loss that you're used to, let's say on your $1,000 account. All of a sudden, in reality, on a $100,000 account is, substantially bigger. And that might affect you. You might be used to like a $10 loss and all of a sudden you're getting a $1,000 loss. It's the same percentage. But all of a sudden you're seeing $1,000 losing all the time thinking, oh, that's something I can't handle. You might start closing trades out early when they get into profit. Your trade might get to, let's say, let's pick a figure. It might get to say like, $50 would be your profit target on your personal account. And this 100,000 account, it might therefore need to get to $5,000. And you go, oh, I'm up $1,000. I'm going to close it now. And of course, then all of a sudden your trading strategy gets forgotten. And all of this combines, and I'm going to give you a lot of tips shortly of how to overcome these things. One of the things I think is really important though, and this is what I do personally myself, is consider a VPS, that's a virtual server, and a copier. Now, I'm not saying going out copying other people. I'm saying copying your own account. So what I do to overcome this is I use a virtual server. And on that, I plug in my prop firm account and I put in my own live account. And the virtual server is running by itself in the background. And I just let it run by itself. I don't look at it. I just make sure once a week it's running and operating. And I've got a copier between the two. In fact, it allows you to have multiple prop firm accounts, all on different lot sizes, different account sizes, potentially different denominations. and the copier software takes care of the lot sizes needed. But all I need to do is focus on my live account, my personal live account, because I know that if I'm making money on my personal live account, that same percentage is being made on all the prop firms behind the scenes. One, it saves you a lot of time because you're not calculating lot sizes and things like that, but it also takes away a lot of that emotion. All you're seeing is on your normal desktop, your normal laptop, whatever it might be that you trade on, you're seeing your own personal account. And I think that's something that's hugely important, because it takes away. Someone's writing about no VPS if you log into MD5. I'm not sure about that, but I mean, I'm just saying this is how I do this. I just find it's a lot easier, and it's just a tip for potentially you to consider. I'm not saying you have to, but I'm saying it's something that you consider that you may not have thought of. And that's what I bring to the table with my experience and talking to thousands of traders and doing this myself. It's just giving you a few more ideas here to go, hey, this could be an easier way of doing this. Because to me, your focus as a trader, if you've gone through the demo and the small and maybe a slightly bigger live account and you've done well, why change anything? Just focus on doing that right. And behind the scenes, the hard work and the lifting's been done by the virtual server and the copier. Preserving capital. Now, this is one thing that when you think about a prop firm, it's probably the thing that's going to fail most people. So why do people not focus on the most important thing? Because ultimately, it's not your money. It's not your money. It's their money. They're about controlling risk, managing risk, preserving capital. Because if you want to go and do something silly like not put stop losses in or have crazy risk per trade on your own account, go for it. That's your choice. It's probably not going to get you very far when it comes to a prop firm, though. So for me, one of the most important things you can do is to keep your risk very low per trade. So this is a suggestion again. It's not you have to. It's just purely a suggestion. 0.25% of your account risk per trade is what I consider. That's what I use myself, okay? That's what I use. If I'm trading my normal account, 0.5%, that's my personal risk. On a prop firm, 0.25%. So you think about this in very simple terms. And again, when we get through towards the end, I'm going to show you some examples and some actual trades from this week, okay? But just for now, you think about it in simple terms. 0.25% per trade. That means that 4 trades go wrong in a row, you're 1% down. Most prop firms will allow maybe, 4, 5, sometimes 6% drawdown total. So if you think about that, you've got 4 trades, 1%. Let's say you've got 5% total drawdown. What's that? You've got 20 trades. Now, you really shouldn't ever come close to 20 trades going wrong all in a row, not if your strategy is any good. And this is where doing something simple like this can help minimize the biggest failing that I see that most people have when it comes to a prop firm. So we're going to show examples on how to do this as well. Keeping your risk per trade equal across all trades is, again, something vitally important. And again, when I show you my MT5 account shortly, you'll see exactly what I mean. But what I'm saying here is that it doesn't matter what time frame chart I'm trading. It doesn't matter what the stop loss of the trade is. It doesn't matter how long the trade's in the market. It doesn't matter what the market is, whether it's a reversal or continuation. It could be the euro US dollar. It could be Bitcoin. It could be gold against the Australian dollar. It doesn't matter. For me, every single trade that I take has equal risk. And again, I'm going to show you how we do this. Because it's really important that you know how to calculate the lot size correctly, or the position size, whichever you want to call it, of every trade. Really important that you know how to do that. Please, please, please forget about pips. They are completely and utterly irrelevant. I do notice now that over the last number of years, people have started to get away from that. When I started trading, everybody, and I mean everybody, talked about pips. They talked about their stop loss and pips. They talked about how many pips they're making per week or per month. It is completely and utterly irrelevant. It does not matter. It's all about the lot size that you have on your trade to ensure that if that stop loss gets hit, that trade loses, in my example, 0.25%. Now, of course, you still need to know your stop loss in order to calculate that, but don't measure your success in pips. Nowhere will you 5 on the 5%ers, you've got to make X number of pips. It doesn't matter, okay? So it's a point that, unfortunately, some people still have pips as a thing in their mind. Forget about it. Righty. Another important thing is high reward to risk trades. So it is very important that your profitable trades, when you have a profitable trade, you make several times the risk that you take. And again, when we come near the end, you'll see just from this week, I've got examples exactly between 2 and a 4 to 1, even this week, to share with you. So I'm not going out there saying you're risking 0.25%, and therefore you have to have a 2 to 1 or 3 to 1 or a 4 to 1. I'm saying that with the way that I trade and my strategy, that most of my trades will fall into that ratio. Sometimes it depends on if they're limit orders, and because I'm going to talk about limit orders, retracement orders shortly. It depends if it's a market order. It depends if it's a monthly trade or maybe a 2-hour trade. But most of my trades, we've actually had a trade this week that's been about a 6 to 1. But most 95% of my trades would be between a 2 to 1 and 4 to 1. Okay, so that means if you're having losing trades and then every so often a winning trade, it's making up for those losses and more. So small controlled losses and bigger gains are the key to your success. It really, really is. If you can do this in your trading, that is one of the most important things. Small controlled losses, okay, and bigger gains. The amount of people, you would not believe the amount of people that I hear come to me saying, hey, Andrew, I've got a 90% win rate. And I go, oh, fantastic. That's amazing. Well done. And then they go, oh, yeah, but I'm losing money. And that happens. Now, if we go back to the pips idea, which we're not going to talk about because we don't use pips, but just think about this. Let's say someone goes, oh, I make 10 pips profit and I'm 90% winning, but my losing trade loses 100 pips. So it doesn't matter whether it's percentages or pips in this example. You're making 9 of something and or 90 and you're losing 100. So people come to me with these high win rates, but they're losing money. However, you flip that around and look at what I've just set up here. If you had a 30 to 40% win rate, but you have high reward to risk trades, you will make money. Now, if you can get that up closer to maybe like a 50 or even 55, 60%, you're doing really well. And I use limit orders, retracement orders, limit orders on a lot of my trades to ensure that I have a high reward to risk ratio. Really important, because the issue that I see that if you place a market order and you go bang straight in the market, that brings a lot of emotions into your trading because you feel like you've got to jump in right now because it might start taking off in your direction. However, if you see the setup and then you put a limit order, let's say you're buying, you wait, all you're doing is putting a limit order. If the price retraces, it gets filled and then you're looking for it to move up again. What that means is in the way that we trade, you can drastically increase the reward to risk ratio of your trades by doing this. So you have all this in place, and now you're out there going, I'm going to type on Google, looking for a prop firm. What is it that you're looking for? Like everything in this market, there's a select few really good ones out there. It doesn't matter whether it's prop firms, brokers, education companies, robots, whatever it might be. There's a few really, really good ones. I'd like to hopefully think that we're one of those good ones. The 5%ers, I know, are one of those good ones because it's important that you have a reputable, can't even say the word, prop firm. It's really important. Just look at their logo down here. Established 2016. We started the Forex Trading Coach in 2009. We've been around for some time. We've seen all these different conditions. We've been through different conditions, and we're still both thriving. And why I'm so pleased to be, asked to do this webinar for you, because we both have similar values. We're out there being real people doing real things, but for the greater good of people who want to work hard and make a success of this. The other thing you should also look for in a prop firm, I believe, as a real trader who uses low risk, no time limit on reaching that profit target. I think that's very, very important. You shouldn't be rushing to pass these challenges. If you're on one of these challenges that say like 30 days and you go, well, really, that may be just, 20 days of trading and maybe a few quiet days, and you're up, let's say, I don't know, pick a figure, 6%, 7%, and you've got like 2 days left, you might do something really stupid to try and get the 10% by the end of that challenge. Now, you might fluke it and do well, or you might do something silly and overextend on the trade and it loses and you lose everything. Even if you fluke it, it's not a good thing, because next time you're probably not going to fluke it. So to me, it doesn't matter whether you take a few days, a week, several months to get to that profit target. It should not matter. Again, it comes back to preserving capital, low risk per trade, and keep your drawdowns low. Once you know how to do this, once you're successful, rinse and repeat. And then, the world's your oyster. Now, a good prop firm will allow a good trade to become very successful. It doesn't matter how much personal capital you have today. Completely irrelevant. Education, knowledge, strategy, all of that is what is key. You can have $1 million in your account, but if you don't know how to trade, you're going to lose money. You can have $100 in your account and you know how to trade, you'll do well, you'll get onto a prop firm and you'll do well. So really important. Thank you for the questions that's coming through, by the way. I will definitely get to answer them all, but I just want to make sure that we get to now getting into more the nitty-gritty of, we've been through a bit of theory. I'm now going to give you some of my personal rules and then some actual trades and examples for you as well. And then we'll get to the questions. So this is what suits me, okay? I'm not saying that you should do this. I'm not saying this is for everybody, but this is me as a person, as a trader. This is what I personally like to do. So I'm a technical trader, okay? I don't look at news. I'm aware of what news is out there. It doesn't influence my trading. I'm a technical trader. I look at candle patterns to determine where the market's heading. It works for me. It's worked for me for about 16 years. It took me 4 years of going around in circles, and believe me, I've tried everything back then. But for the last 16, 17 years now, I've been purely a technical trader looking at the same strategy, candle patterns. So I mostly look at the charts at 5 a.m. Eastern Standard Time, which is in, an hour and a half from now, and 5 p.m. Eastern Standard Time. This is New York time. So the Forex markets, I'm sure you know, works on New York time from Sunday, 5 p.m. New York time, Eastern Standard Time, through to Friday, New York time. Now, each day, like Sunday, the market opens, and then, 5 p.m. Monday, New York time, the next day opens, etc. So at that time, I look at the charts every day. But at the beginning of each month, I look at the monthly charts. And I use my strategy and I go through all the monthly charts and I look at my same strategy across all time frames. It does not matter. It's all time frames, all markets, because it works for me. So at the beginning of each month, I scan through the monthly charts and I go, what have we got there? This month, there are 8 trades that I personally have open on monthly charts. Some months there might be none. Some months there might be 3 or 4. Just depends. This month, for February, I have 8 trades open. At the beginning of each week, so that's Sunday, 5 p.m. New York time, I scan through the weekly charts. Now, of course, you could do that over the weekend because the Forex market's shut. But for me, my Monday morning, Sunday, New York time, I scan through the weekly charts and I look at what's happening on the weekly charts. This week, I've taken 2 trades on the weekly charts. And again, that can vary. Now, it doesn't matter what the size of the stop loss is. It doesn't matter what the direction, what the market. Those trades, monthly charts, weekly trades, and everything else below that I'm going to talk about has the same risk for me. Okay. So at this 5 p.m. Eastern Standard Time, change of day. It's a really important time in the Forex day anyway. I look at the daily charts each day, and at the same time, the 12-hour charts close, and therefore next candle opens. So did the 8 hours and the 6 hours. So each day, I can go through those 4 time frames very, very quickly, and I can make my analysis of what trades I'm taking. Today, I took 2 daily trades, and someone on here who's a client's going to correct me, 2 or 3. We had 2 or 3 12-hour charts. One of them I'm going to share with you actually is a US yen trade we took today, a buy trade on the 12-hour US yen. It's a trade that I'm going to show you. It's already hit the profit target. I'll show you on my live account shortly. So that time is really important for me. At 5 a.m. Eastern Standard Time, which is in an hour and a half from now, I'll scan through the 12, the 6s. If those are quiet, I'll then scan maybe the 4 and 2 hour charts. But I can do this myself, the whole lot, looking at the charts just twice a day in 30 minutes a day easily. Absolutely easily. Because I think it's really important that you have your trading there as an enjoyment. It's not a grind. You shouldn't have to be sitting there just watching the charts all day, being scared, because then you get emotions come into it, or you feel you should be taking trades. Because I know when to look at the charts and I use limit orders, I find it very easy to trade as a full-time trader in 30 minutes a day. You don't have to trade just these 2 time frames. If you can't, it doesn't matter. Because we use limit orders, you don't have to be there at the exact time, and there are other trade times you can look at. So I look at the Forex charts, hence the Forex Trading Coach. But over the last number of years, things have evolved. We've got more markets available. So the same strategy, I look at commodities, indices, metals, cryptos. Just this week, I've taken a trade on corn of all things. We had a crypto trade today, one of our daily chart trades. So the markets are there now for you to be able to trade. Take advantage of them. And I apply the same strategy and logic to all markets, all time frame charts. So for me, I focus on continuations and reversal patterns. I love continuation patterns. They're my preferred pattern. If I see them on a chart, I love them. I take them. Very high probability of success, because for me, that means let's say the market's moving up. I see a bullish pattern. But first of all, I want long-term uptrend, short-term pullback. Then I'm going long again. So that's what I call a continuation pattern. I also look at currency strength and weakness, and that helps to keep me on the right side of the market. As an example, if we're saying the Euro US is it's moving up, let's just say it's moving up, it's bullish, and the Euro is strong against the yen, it's against the Aussie, against the Kiwi, against the franc, it's strong, and the US is really weak against everything else. So therefore, Euro US looks like it's moving up. If I see a trade on, say, a 4-hour chart or a 2-hour chart, and it's bullish on the Euro US, it has to have more weight behind it, doesn't it? Because it's trading in the right side of the market. So little things like that on the shorter time frame certainly help. We've mentioned every trade has low and equal risk regardless of the market or size of the stop loss. This allows me to trade various time frame charts, knowing that all trades have equal relevance. So I can take a trade on a 2-hour chart and a trade on a monthly chart. And for me, if one makes and the other loses, it doesn't matter. It doesn't matter which way around that is. If one makes, one loses, I know I'm still making money. Because let's say I've risked a 0.25% on the monthly chart, and the 2-hour chart makes profit, and it makes, let's say, 3 to 1. I lose a 0.25% on one trade, and I make 0.75% on the other. Net, I'm still 0.5% up. It doesn't matter if the monthly chart wins or loses, or the 2-hour chart trade wins or loses. Doesn't matter. But you're still net up. You're still net positive. And I control my risk by accurate lot and position sizing per trade. Every trade has a stop loss and a profit target in place. Really important. And as mentioned, I use limit orders to ensure high reward to risk trades. It also means I don't need to be at my charts at the exact time. I trade the close of a candle. Okay, so right now we're live, and right now it's 9:36 p.m. here in New Zealand right now. Completely, there's nothing changing. Maybe in 24 minutes, if I wanted to trade the 1-hour charts, which I don't, that's when I would look at the charts. So for me, I know that for another hour and a half, there's no new possible trades opening for me because I only look at the close of a candle. Really important though, if you trade that 5 p.m. New York time or round about then, I personally don't take trades until after 6 p.m. because you'll notice that the spreads on some pairs can be quite high for that first hour. So let them drop. I prefer a set and forget approach to my trading. I found that it's the best for me. I don't move my stop loss to break even. I think this is meaningless. Break even is pointless. Break even is only the price that you enter the market. It has no relevance to being a safe stop loss level. So when I hear people go, oh, I think I should move my stop loss to break even, I'm going, why? What's the point? It doesn't mean anything. Put your stop loss at a level that's safe for the trade. If I do close a trade early, and I said here this is rare, but if I do, and sometimes I do, I prefer a partial close of that trade. And then if I move my stop, I move it for a technical level. Don't just go break even. That's just a warm, fuzzy feel good. It means nothing in trading, okay? Use technical levels for a reason. And I'll put down here, if you've seen my videos, podcasts, you'll know that I love these things called round numbers. So I love to take trades that have a stop loss behind a protective round number or a strong support and resistance level if they're behind the pivot point. Let's say we're buying, okay, and we put our stop loss below, it's below a round number, a pivot point, a previous swing low. Things like that. The more factors you can put in your favor of your stop loss not being hit, the better. Likewise, actually with the profit target, don't go and put your profit target a few pips above a round number. So round numbers are level ending in 0, 0. Bring it down on a buy trade so your profit target's before that next barrier. Little things like that you can do to help yourself. Okay, last one of my personal rules, then we'll look at some trade examples. Consistency is key. Low risk per trade is key. High reward to risk trading is key. The longer time frames, for me, I find them more reliable. It makes more sense, doesn't it? You know, you're looking at a daily chart, you've got 24 hours worth of information of data there. You're looking at a 1-minute chart, it's a little bit hit and miss. So longer time frames, for me, more reliable. Quality of your trades are better than quantity. Quantity of trades is completely irrelevant. The quality of your trades is what's important. And knowing your strategy, having confidence in your strategy, having confidence in yourself, all of those things, knowledge, education, will stand you in a good stead when you go to a prop firm. So let's have a look at a theoretical example. Then I'm going to end with showing you a real example that I've just taken a screenshot just a few hours ago. This is a great example here of everything that I've just covered. Let's say in this example, you had a 100,000 prop firm starting account and you're risking, with my suggested risk, again, it's just mine, it's not what you have to do, this is just Andrew, 0.25% risk per trade, okay? Now, I've made up some pretend trades in here. Now, it's not, you don't just go 0.25 of 100,000 and then, you know, add this. You've got to realize that as your account moves up and down, you're risking 0.25% of maybe a higher or lower level all the time. So I've gone through and assumed that these trades were taken in order, okay? So every time you see through here a negative 0.25, that's when a trade gets stopped out at your preset stop loss level. A trade like this makes a 3 to 1. So in other words, you risk 0.25, you make plus 0.75. So it's a 3 to 1 risk to reward. This one here would have been just over a 2 to 1. So I've not taken examples here of ridiculously high performance. And you'll notice I've given you some examples. There are 3 trades stopped out in a row here. There's a couple more there. There's 2 more there. Now, I'm just going to move my camera slightly. So at the end of this week, here in this example, 100,000 would have gone to 102,206. Okay, start the next week. Had a loss, a gain, a loss, a gain, a couple of gains. And then through here, 1, 2, 3 more losses, a few more losses. But overall, you've gone up to 106,374. Week 3, couple more losses in here, gain, loss, gain. And have a look through here. You can take these losses, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5 losses in this example in a row of losing trades, okay? It's not going to kill you because your risk is so low. and then a couple gains, another loss, you're up to 108,051. Starting to week 4, and you see what I mean about not rushing this. Again, just an example. Have a look through here. A couple more losses. 3 in a row again. Another 2 in a row. And then you suddenly get to your 10%. So in this example of your prop firm, you've made your 10% in the 4 weeks here. So again, purely a theoretical example to highlight what I've just covered in here. 56 trades over these 4 weeks. 46% of them were winning trades. 54% were losing. So in this example, you actually lost more trades than you made profit on. Remember near the beginning, I said about or halfway, I said about the guys who have a 90% win rate who lose. And I said people that have maybe a sort of 40, 50, 55, 60% win rate can do incredibly well. This example is a 46% win rate, and you've made your prop firm 10% in 4 weeks. 5 trades losing in a row. So these 5 in here, that's, depends on what your account size was at the time, but those 5 in a row are only 1.25% negative. Most prop firms have that sort of 5, 6%. Some have so much within a day. But with this, you can take these losses, a streak of losses. I haven't exactly said this is particularly great trading because the highest consecutive profitable time here was only 3 trades out of 56 in a row before having a losing trade. So you can see on here, I've made some quite conservative trades on here. These reward to risks, they're not massively high. Now, just want to share with you this. Now, this is just one account of mine that I then run through to a prop firm. Now, this is not my monthly, my weekly, or my daily charts. I actually have those on a different account. These trades here are 2 hours, 4 hours, and 6, 8, and 12. I trade on this account just this week. I thought it was really important to share this with you because I want to show you that this is real. Now, you'll see on here, this was just a few hours ago. He's using big time frames. No, this example here is between 2 hours and 12 hours. It's just what suits me on this particular account, okay? This is every trade I've taken from in here this week. So the 5th, looking at my calendar, was Monday. Today is Thursday here. And I mentioned to you near the beginning, this actual trade here was posted on our membership site. In fact, every single one of these trades has been posted on our forum site and membership site, every one of them. With screenshots of the trades at the time, mention we're taking them, why, and screenshots of the results. But don't worry about how much money or anything. This is a $45,000 account, okay? But in here, the important point for you to look at here is 2 things. Actually, first of all, let's start here, volume. You notice that these all have different lot sizes. And therefore, the difference between the entry and the stop loss is calculated accordingly, and then the position size according to my account, the size, the denomination, and what currency I'm trading. But have a look in here. You can see that pretty much every trade in here, there's one slight exception there, is roughly, let's say, what, $56, $57, okay? So that equals my 0.25% risk. But have a look at the profitable trades, the ones in blue here. The smallest trade is 100, so that's slightly under a 2-to-1. The biggest trade here today on the US yen is 211. So what's that? Roughly not quite a 4-to-1, but very, very close. So these trades range between a 2-to-1 through to a 4-to-1, exactly as I said at the beginning of the presentation. Now, when I put this presentation together, I didn't know I was going to show you this screenshot, of course. I wanted to show you something live. But this is shown exactly just this week. You can't make this stuff up. This is just this week in 3 days of trading days, exactly what I've just spent the last 45 minutes showing you, because that's what we do. This is real results. And that's, to me, is the key. Now, this account so far is up 1.56% in 3 days. And if I just go back to my previous slide, you can see it's kind of in line with what we're getting here. Now, we've still got 2 trading days to go this week. I could easily have that 1.56% up to, sorry, I'm trying to find the next screen, up to about, 2%, maybe a slightly more, might be slightly less, but it's going to be around, 1.5 to 2.5%. So you do that 4 times in a row, there's your 10%. But don't forget, as your account size grows and your profitable trades become bigger, so therefore it takes less time once your account size starts to grow, because you're working on a percentage risk and therefore reward to risk. Hope that makes sense. All right, let's move on to the final slide here. Ask questions. I'm going to go through these. We'll probably get Sol to come back on shortly. But look, thank you for being here. We're going to spend another 10, 15 minutes covering these questions. Hope you've enjoyed the session. Massive thank you to Sol and the 5%ers. They're an awesome group of people, awesome company. One of our very best clients, Rio Chong, who lives over in Singapore. He's been with me here as a client at the Forex Trading Coach for a number of years. He does extremely well, and he's been using the 5%ers. In fact, about 2 years ago, I think Sol did a video and podcast with Rio because he's done so well with his prop firm trading since he's taken on board everything that we've taught him. So if you feel free to have a look at my website or contact me, this is how you can do it. And I'm going to go through some questions here because there's a lot come through. Sol, are you back on board with us there? I'll get you to maybe pop on and we'll go through some questions here. I think he's there. Otherwise, it's just me. Desmond, does the 5%ers allow you to use a trade copy of personal accounts to a prop firm account? We'll find out hopefully if Sol comes back on in a minute. Enjoying the session, but I've noticed you're speaking from a European perspective where most traders, I'm in New Zealand, so far from Europe, where most traders can probably afford a basic $5,000 account. My question is, someone from Nigeria and Africa, yeah, look, that's the same thing. It doesn't matter where you live, how much money you have, providing you know how to trade right. That's the thing, you see. You've got to trade right. It doesn't matter that $100 could be an enormous amount of money for you, or it could be, just small change. It doesn't matter. It's the important thing is learning how to trade properly. Bruce, are there market makers in Forex trading? Well, I think with 5%ers, it doesn't matter. You're talking about a brokerage there. Seeing the results, do you partially close positions or exit early? No, those trades have all, you notice every single trade has either hit the stop or the profit, every single one. I've not closed these early. It's just they've hit their profit target. So yeah, you notice that with these trades, I mentioned about round numbers. Here's a buy trade on the US franc to illustrate the point. My stop loss is below 0.87. Things like that. Always use those round numbers. Okay. Sol, does the bootcamp funded account require a 10% gain a month? I'm not sure. We'll have to get Sol to answer that one. Does your broker require different leverage amounts on different currencies? My brokers, I use Blueberry Markets, Go Markets, Fusion Markets as my main brokers myself. They all have 100 to 1 for me. Great presentation, smooth, informative, well done. Thank you very much. I'm curious how to arrive at the strategy gearing 46%. 46%. Yep. So all I've done, and obviously my live account's real. This here is a hypothetical example in here. So all I've done is added up every single trade. There are 56 in total. 26 of them were positive. 30 of them were negative. So therefore, 46%, which is 26 divided by 56 multiplied by 100, 46%. So I, in this example, would have lost more trades than, or more trades hit the stop loss than hit the profit, because they're going to hit one or the other in this example, and we're still profitable. I have a 12 to 30% win rate, even 30% rarely. Do you have steps to follow, resources to watch? Yeah, I've got about 535 videos on my website made each week for the last about 15 years. Why is break-even meaningless? Because break-even is purely the price that you enter the market. It has no other relevance at all. I'm just going to see it. Sol, are you around? I see you're still muted here. I'm not sure if I need to end my presentation or not. Just type in the Q&A, Sol, or the chat if you want me to end the presentation and come back to the screen with yourself. No, not sure. If otherwise, we'll just keep chatting. Yeah. So to me, break even is purely the price that you enter the market. If you want to put your stop loss at a safe level that's safe for that trade, that gives the room, the trade room to move, room to breathe. Jan, have you automated your trading? No, I trade prop firms on manual trading. Shane, I see my take profit approaching. I find I'm always looking at the next higher time frame. No, I personally don't do that. I'd suggest that you trade the time frame chart that you're looking at the time. Let me bring this back up. Unfortunately, I took off the screenshot here. These range between 2 hours, 6 hours, 8 and 12-hour charts. So focus on the time frame chart that you see the trade on and trade from there. I'm just going to see if I can end the slideshow just in case we need to go back to Sol. Can't see Sol coming on. Oh, well, let's keep going. Do you need a stop loss when scalping? Well, I don't know because I don't scalp. I wouldn't suggest scalping personally. Do you need one when you're scalping? If you're watching it, it's hard to say. I don't trade that way myself. I have tried it years and years ago and found it was totally hopeless. You end up spending so much in spread and stress that it's not worth it. If the trade goes up and you've taken profit, why not move your stop to break even and it turns against you, won't lose money? Because that, again, my risk doesn't matter. I don't care if a trade loses because it's low controlled risk. If it's not got to its profit target, give it time to get there. If it comes back, if you start to see it coming back, let's say, and it's towards the end of the week or there's a change in momentum, look at maybe closing some of it in profit. Maybe you could move your stop. I'm not saying don't move your stop. I'm saying move your stop to a technical level. Even if you move it up into profit, but for a technical level, don't just say break even. I just think that that's not a wise thing to do. Can I open 2/3 trades in the same direction for the 5%? I don't know. You'd have to ask Sol that one. Bruce, no, glad that helps. Came late. Have we gone over the strategy? We see some examples. I've just shared with you trades from just this week, Ricardo. Let's just go back to here's Sol. Back on again. So I'm just going to go through the chat questions if there's any on here, or maybe you can answer some of those for me.
No worries. And just remember, everyone, that this is being recorded and we'll upload the recording next week. So if you missed anything, you'll be able to review it on our YouTube channel.
Awesome. Jonathan's made a lovely comment. I started trading with Andrew 7 to 8 years ago. Great teacher and mentor. He walks the walk. Nice. Thank you, Jonathan. So you might be able to answer the question regarding some copier. Do you guys allow someone to have like a VPS and a trade copier on their personal account?
Yeah, no problem with that. Awesome.
I thought so. Just wanted to check. I think it's a great way of trading because it takes a lot of emotion and risk, not so much risk, but emotion out. It allows you to trade multiple accounts. You don't have to fiddle around calculating lot sizes. It just does it for you.
Absolutely.
Yeah, I think there's a few other questions about different time frames here.
Okay, you can tackle one more, and I think we're good to
someone says, do I use indicators, moving averages? No. Fibonacci's, yes, definitely, but not your standard lagging indicators. No, Fibonacci is for me as a way of entering and exiting trades. And a number of people asking about the recording, Sol, but I think you just covered that one.
Yep.
Cool. I think we've covered pretty much everything.
So Andrew, that was a great presentation. I think everyone here, I see the engagement, and I think it was very valuable for everyone. So Andrew, we will make sure to include links on the recording so people know how to reach out to you and to get in touch with what you do and the Forex Trading Coach. And again, thanks again, Andrew. I appreciate you, making the time to be here. I know it's late over there, but it was great content. And so thank you, Andrew. Thank you, traders, for coming and for staying and for being, active in the presentation. And Andrew, we'll be in touch. And until next time, guys.
Awesome. Thanks, Sal. Thanks, everybody.
See you, everyone.
Bye.